Welcome to Trader TV Fixed Income, your insight into the trading climate for professional bonds investors. I'm Dan Barnes. The infrequency with which many bonds trade makes the ability to react to market changes a challenge for investors and makes quality data key in seizing investment opportunities and delivering best execution. To discuss how investment firms can get the data they need to be responsive, we're speaking with Frank Cerveny, Head of Markets and Sales at MTS. Frank, welcome back to Trader TV.
Thank you, Dan. It's great to be here.
So where do traders find information gaps in the data they have today?
There are two principal gaps that traders are concerned with. The gap between the information they have and that of their competitors, but also any information asymmetry that exists between their book and that of their clients.
Okay.
And as markets become faster and more efficient, any differential in these gaps becomes more pronounced over time.
Okay.
That is the reason why at MTS we've put a lot of effort into expanding our data offering, not only for cash bonds and repo, but also for the corporate and EM bond markets as well.
What effect do those gaps have on firms' ability to trade?
Anytime there is information asymmetry, it creates winners and losers. At the heart of this information asymmetry is really two principal issues.
Okay.
Speed and quality. Now, before we even go on to address the speed issue, I think it's very important to address the quality issue. Whether you be a model builder, a trader, an academic, a regulator, or even a policymaker, having accurate data is critical. I remember an example in 2007, 2008, when all of a sudden the screen started to disappear. And there was a big argument on my desk between my traders and senior management over where the right place was to mark the book. Now, there's a theoretical price to every trade, and there's a price where you can actually sell it in the market. Relying on the theoretical price can be very dangerous. And in this example, we were rewarded for marking the books down early or getting out.
So what are the lessons we can take from that?
Always get the best data you can find, and always rely, where possible, on live executable pricing instead of any derived or matrix-based pricing.
How will that data fit into traders' workflows?
That's a great question, but it's also very dependent upon the role that you play.
Okay.
Whether you're building models, analyzing historic trends, market-moving events, trying to set policy, whether it be pre-trade, at trade, or post-trade, the data and input you have is critical. Increasingly, we're seeing individuals use data in different ways. For example, we're increasingly seeing cash traders ask for repo data. Even if they're not trying to trade in the repo markets, they want to know what is the cost of funding and running a position before they choose to enter into it. And similarly speaking, as we move towards greater auto execution, having access to live data is critical.
So how do you see data being supplied more effectively?
At MTS, we already use a number of ways to deliver data, whether it be an API, end-of-day flat file, or through normal data vendors, or even co-location. We're looking for ways to simplify the transmission of data, and we're always looking for improvements. Since the advent of MiFID, the demands and the amount of data we're being asked to handle has increased dramatically. And this will only increase further with the advent of SFTR. And we are trying to find more ways to process this data and deliver it in an efficient manner. We're also mindful of the resources at hand. So, for example, a lot of buy side lack the data scientists that are found on the sell side. So for the buy side, we have tried to integrate data not only into our GUI, but allow them to take advantage of new protocols such as accept best and auto execution to help limit any impact fast-moving markets or changing data may have.
We hear about active fund managers becoming more structured in their approach to investment management. Does that mean they're consuming data in a different way?
I think first and foremost, they have to now. The advent of MiFID has basically changed the rules, where now it's the responsibility of even the buy side to prove best execution.
Yeah.
Now this is a very big ask, because all of a sudden the number of fields and the amount of information they're tracking makes it very, very difficult.
Yep.
At MTS, we've made great efforts to kind of redesign our GUI in a way to make this easier for the buy side. And we do that first and foremost at pre-trade by supplying data in an easy to read, easy to view format. So before you decide on what to trade, you understand how receptive the market is for what you want to trade. At the time of trade, and then in terms of post-trade, when you're analyzing your trades and trying to prove best execution.
Frank, that's been brilliant. Thank you.
Thank you, Dan.
I'd like to thank Frank Cerveny at MTS, and of course you for watching. To catch our monthly reports on other markets or to subscribe to our newsletter, go to tradertv.net.